Ladies and gentlemen, good afternoon. Thank you for your attention and focus on ALROSA. Before I begin, I would like to start by saying that, ALROSA delivered a very successful year of 2014. Most importantly, we managed to deliver on all of our plans and commitments in key metrics, be it operational or financial performance. Definitely, our operations were affected by the devaluation of the ruble and other events of the end of 2014, and I'll dwell upon that at a later point. As of 2014, ALROSA remains the global diamond producer in the world, with a market share of close to 30%. It has been at around that number for 5 years now. Last year we produced about more than 36 million carats, with the total reserves, JORC reserves, in excess of 1 billion carats. That's the largest reserve base in the world. This would last for our operations 26 years to come. Speaking of the financial performance now, 2014 delivered the best results in our history. For the first time ever, we managed to sell our production for a total amount in excess of $5 billion. In ruble terms, the revenues went up by more than 23%, 207 billion rubles in total, 45% of the EBITDA margin, 94 billion rubles of the EBITDA. Debt to EBITDA ratio stands at 1.9. ALROSA has been developing rather successfully. We are the largest rough diamond producer, as I mentioned, and our core production area is in Russia. Russia is the largest region in the world where diamonds are produced. Please mind, though, that we are not committed to Russia alone. We also own a 33% stake at Kitoko Mining, based in Angola. As of recently, Kitoko has seen some very positive changes in their corporate governance. Their CEO now is a Russian citizen nominated by ALROSA. We expect our cooperation with Kitoko to strengthen further. We know there are good prospects in Angola, with some good fields coming quite soon, and we hope to get some good terms there. On top of that, we continue our global expansion. Last year, we restarted our office in Dubai, because Dubai is becoming a major diamond trading center these days. Let's take a look at the 4 key elements of the diamond market. Let's start with diamond production. Top left corner, as I mentioned, about 30% of the global market falls into Russia. Botswana follows suit, second, with 18%. In the past decade, global production has been going down. It was as high as 170 million carats some years back, but now it's down to 130 million, mostly explained by De Beers cut in production following the financial crisis and the depletion of Rio Tinto fields in Australia. In a nutshell, the supply side has been rather flat and declining in the recent years. Now cutting and polishing, top right corner, 72% of that market is India, with significant growth from 50% to more than 70% in recent years. Taking into consideration major efforts by the Indian government to foster that market further, I believe India will be growing in size. Now, diamond jewelry manufacturing, bottom left. China and India are the global leaders here, with major growth in China in the past decade, a tenfold growth. And now China makes about 40% of all diamond jewelry. Finally, diamond jewelry retail sales, bottom right corner. This has been rather unchanged in the recent years, with the lion's share falling into the United States, 27%. India and China combined contribute another 40% together. Please note that in the last 10 years, consumption of diamond jewelry in India and China went up several-fold, mostly through the growth of middle class. Luxury goods now, and diamond jewelry in particular, have been growing quite well, with the compound average growth rate at about 7%, be it luxury good altogether or diamond jewelry in particular. And diamond jewelry contributes about 25% all luxury goods, and that is about $70 billion in total. We observe certain stabilization, I'd say, as you can see from the bar charts in the middle. It is explained by the fact that there was a major um, hike following the financial crisis, and now the situation is back to normal. The supply side is very stable, as I explained, and the total growth globally for 2014 is just around 1%. Looking forward, mid-term for the supply side, as you can see, by the year of 2019, there will be some growth of about 2 or 3%. ALROSA will contribute a major portion of that growth because we are so active in our investment projects. So that's the supply side. But after 2019, we would expect to see a decline globally as Canada and Australia will see depletion of their main fields. And in the coming decade, ALROSA and most of the leading market analysts would come up with a consensus growth of about 1%, which is a good environment for further growth in our business and the pricing environment. Let's take a look at the demand side now. As I mentioned, most of the demand comes from China, India, and the United States. The United States demonstrates a very sustainable consumption with good growth of disposable income at 2 to 3%, and that effectively leads to high consumption of diamond jewelry. The situation in China and India is quite good as well, with good growth of the middle class. With these two countries contributing to the demand, we expect the average growth rate of 7% in 2014 and 2015. Based on what I have just explained, up until 2019, we're going to observe somewhat aligned growth of both the demand and the supply sides of the market, but post 2019, there will be a gap between the two. Hence, we would expect the prices would grow at an even higher pace. Speaking of the prices now, historically, the price has grown at around 6% per annum, with a major hike, as you can see from the lower part of the page, at 70% following the financial crisis of 2009. Then the market got back to somewhat low levels, and currently we observe the traditional historical growth of 6% per annum. Let's proceed to another section to explain our production assets. ALROSA currently has 4 underground mines, 7 open pit mines, and 14 alluvial places. Please mind that 95% of our production comes from the Republic of Sakha, Yakutia. At the same time, our new project in Arkhangelsk region is ramping up to increase their share from 5% now to 15% in the nearest years as they increase their volumes. The first underground mine was launched back in 1999, the International Underground Mine. Over these years, we have launched 3 more underground mines, Aykhal, Mir, and Udachny, which the latter was launched mid last year. Gradually, our underground production will stand at around 35% looking forward. In 2014, 58% of our production came from open pit mines and 24% from underground mines, with the remaining part contributed by the alluvial places. Currently, ALROSA does not have any further plans to convert any other open pit into an underground mine. It's not feasible at this point. ALROSA's strategy does envisage a gradual growth of production from 36 million carats to 41 million carats by the year of 2021. In 2016, in 2015, we target more than 38 million carats already, mostly driven by our new project in Arkhangelsk. Investment-wise, this has been pretty much done. So production will ramp up to the design capacity of 5 million carats. The underground mine of Udachny is a unique project for Russia and globally as well, with a design capacity of 4 to 5 million tons of ore and hence about 5 million carats per annum. Now the capex As you can see, we peaked in 2015 at 35 to 36 billion rubles. Looking forward, as our core investment projects are finalized, the investment level will go down to 22-24 billion rubles annually, mostly targeted to maintain the mines and the infrastructure that are already existent. Now let's continue to explain some core projects by ALROSA delivered in the recent years. As I mentioned, the most important one is probably the Udachne underground mine, with the cost of the project standing at 55 to 56 billion rubles, and also Sever Almaz project, right part of the page. We have launched 2 pipes there already, and gradually will ramp up to 5 million carats per annum. The cost of the project stands at around 50 billion rubles. Very recently, just in March this year, we launched a new open pit mine, Buty Obinsky at Nakinsk ore field. Very good one, with ore grade at 5 carats per ton. 18 months back, we finished ramping up Aihal to its full design capacity. That's an underground mine. As you are aware, back in 2013, we acquired 100% stake at Nizhnelenskoye. Hence, all our investment now are focused on developing diamond mining. On top of that, we run a few other investment projects. First and foremost, these are underground mines of Mir, Aihal, and Udachne, with a total resources close to 500 million carats. Nakinske ore field is very promising. Buty Obinske field and Nurbinske field and Maiske field pipe all contribute 150 million carats of resources. Verkhny Munske, a new one for us, will be launched this year, close to our Udachny mining division, just 200 kilometers away. We also have a few other successful projects with the total investment standing at 170 million carats, billion, 100, and the NPV is 170 billion rubles, and the IRR is as high as 26%. Let's proceed to the next section, marketing. The company is focused on long-term contract sales. We'll keep developing long-term relations with our long-term clients. We sell about 64% through long-term, and we do spot sales as well. Also, we run auctions to test the market, and we have to sell large gems, 10 carats plus, through auctions. We have clients from Belgium and India, and as you can see, more than 50% of sales are handled via Belgium, but please understand these are mostly Indian customers off-taking our rough diamonds via Belgium, because India is the global cutting and polishing center. Now let's take a look at our diamond sales structure. About 30% are industrial grade in volume terms. The cost per carat is very low, just 10. Now the value per carat is very low, just $10 per carat. So 30% or in volume terms only contribute 3% in money terms. 70% effectively comes from gem quality stones, and they contribute 97% of our revenue in money terms. Each gem can be classified according to a different position, so to say, and there are more than 100 classifications in total. We have all the outline here in the page, and if you have any follow-up questions, we'll be happy to address. Now let's take a look at the pricing environment. 2014 was rather positive in the terms of pricing. In the first half of the year, the prices were growing, with the growth of 8% in the first half of the year. Then the market got stabler with excessive supply somewhat. So the prices were rather flat throughout the second half of 2014, and in early 2015 Q1 we had to reduce our price by 3%. to get back towards market levels. In the second half 2015, we do expect an increase in demand for our products given the situation in India. Interestingly, they reduced their cutting and polishing operations by 30% and also feedstock procurement as well. So they will be using up their stockpiles, which they will have to replenish. Hence, in the second half of 2015, we expect some very good developments here. Our own stockpile is also in the focus of ALROSA. They used to be quite high initially, as high as 18 million carats at the 1st of January last year. We had committed to investors and shareholders to reduce the stockpile, and we delivered on that. We reduced the stockpile by 3 million carats and will continue doing the same in 2015. Our plan is to sell 2 more million carats from stock to reduce the stockpile to what we need for our operations, and that's just 4 months of production. Financial performance now, as I explained back in 2014, we have been growing across pretty much all the metrics. We managed to sell more than 40 million carats, or close to 40 million carats. That's the highest level all across the recent years. The revenues went up because of the high supply side, and also because of the devaluation, our revenues went up by 23% in ruble terms, whereas the cost of production is up by 20%. The EBITDA stands at 94 billion rubles with a 36% growth vis-a-vis 2013. The free cash flow stands at close to 45 billion rubles, again a nearly threefold growth vis-a-vis 2013. Regretfully, we have a net loss still, more than 16 billion rubles. There is just one reason. It's a non-cash FX loss from the devaluation effect following the revaluation of our FX-based debt portfolio. Even though we have reduced our debt, still it results in a negative net profit because of the FX loss. I'm going to comment on that in more detail in a while. Let me comment on the development of our cost of production. That's a 20% growth because we sell more to start with as we launch new facilities and new capacities. This results in high depreciation, also fuel and energy. But please note the mineral extraction tax in particular. The extraction tax is much higher vis-a-vis 2013. Well, it's not only the devaluation, there is also an increase in the tax, but that has been a joint effort between ALROSA and the regional authorities. As we increase the extraction tax, we'll be getting more subsidies from the local budget to compensate our expense for social costs that we have to run. We got about 2 billion rubles of subsidies last year, and that will keep getting even more balanced looking forward. Let me say something about the net profit. As I mentioned, back in 2013, we had an excess of 30 billion rubles. Then we saw an EBITDA growth of another 25 billion rubles, and the results could have been very positive, but then the devaluation effect. I remember early in 2014, the dollar was just 32 rubles. Now it's 56 rubles end of year. Because of that devaluation of our loan portfolio, that's a negative growth of 64 billion rubles. And that results in a net loss for the full year of 2014. However, speaking of the free cash flow, it was as high as 17 billion rubles at the end of 2013. Thanks to our effective operations, we managed to get an increase in operating profit by 25 billion rubles. Then the capex is getting down as well. This resulted in a free cash flow growth by nearly threefold, 45 billion now. Our debt, it has been reduced, which is a very positive thing. 4.1 billion early in 2014. We managed to repay $600 million of loans throughout 2014, thanks to some very good sales dynamics. 90% of our debt is long-term, and as I explained, it's mostly foreign currency based. Looking forward into 2015, the devaluation obviously has a very positive effect for our revenues. The cost of production is growing as well, but at a much slower pace. Because of that, ALROSA intends to repay another $1 billion of loan, and our loan portfolio will stand in a slight excess of $2 billion in total end of 2015. Speaking of the dividend policy, for 2 years now we've had this dividend policy guidance of 35% of IFRS net income end of in 2014 we paid dividends for 2013, which were record high, as much as 11 billion rubles in total. As to 2014, so far there is no decision taken, but the management believes it would be the dividend would be paid for 2015 on par with 2013 level, even though we produced an accounting net loss in 2014. The discussions are still ongoing, and we're going to discuss that with the two core shareholders in the coming weeks. A few words about our future. Well, we adopted a long-term strategic development plan last year, approved by the government. In the coming years, ALROSA will maintain its focus on the mining operations. We'll keep expanding our resource base in Russia and also Africa, Angola in particular. ALROSA is focused on operational efficiency across the board. Please note that ALROSA would also consider its reputation and marketing. Currently, we have 7 strategic initiatives to that effect, which are being implemented rather successfully. And I'm going to develop on that briefly at a later point. The mining or exploration and production operations is the most profitable element of the value chain. ALROSA will keep their efforts to divest from non-core businesses unrelated to exploration and production. So we'll keep divesting and carving out those assets as it is possible. Exploration is about our future, hence our focus on that. We reorganized our exploration efforts, shutting down one expedition which was not prospective in our view. We invest quite a lot into high-tech equipment, launching some innovative methods in 2014. It's 3D seismic and other distance logging approaches, which will allow us to cut the cost here. But as we cut the cost, we still expect some significant increases in both resources and reserves in the coming decade. As I explained previously, ALROSA is also committed to reducing the stockpile through various means, such as streamlined and industrialized sorting operations, for example. We'll also propose a new classification for our diamonds, adapted to the needs of cut diamond producers. We'll also be promoting our brand through ALROSA Alliance mark. At the same time, our strategy now is to develop direct relations with major retailers such as Chow Tai Fook and Signet, as well as a few other names. In the recent years, we've seen some very positive developments in divestments of our non-core assets. Some of those are historical, some other facilities were acquired in an effort to diversify operations. Well, we sold Timir to Yevraz, and we sold Nold Field in Yakutia, which we really don't need, then the insurance company and the bank as well. On top of that, ALROSA is undergoing through another non-core operations reform. Will transfer 7 airports this year to the federal authorities because these are loss-making, and also kindergartens. We're getting subsidies, as you hear, from the Republic of Sakha to fund their operations, but starting in 2016, ALROSA will not have any social costs related to housing and utilities. Those were loss-making and will have transferred them to the municipal authorities. A few objectives for 2015 now. Our production target is 38 million carats, mostly driven by Sever Almaz and Udachny underground mine, the 2 core projects. Our target for sales is more than 40 million carats, of which 2 will come from the inventories. Now debt will stand at 2.3 billion by the end of 2015 as we repay bank loans for around $1 billion, then reserve replenishment by 32 million carats, and will further divest from non-core assets in 2015. That would be it. Thank you, and I'm ready to take your questions.
What is the plan for any potential sale of your gas production assets, or has that now been put on hold?
Speaking about the gas assets, Rosneft, our partner in the negotiations, suggested that we drill 2 more exploration wells to confirm the reserves. We have drilled 1 such well already, and the data are now being processed. The numbers are quite positive, and once the processing has been completed, we'll revert to our negotiations with Rosneft. I'm not quite sure we'll manage to do that before the end of 2015, but we'll undertake all our efforts to finalize the transaction in the shortest time possible.
Des Killelea, RBC. Could you please let us know whether you are holding back any rough for sale at the moment, as some of the De Beers site holders rejected what looked like excessive offerings, or are you selling everything?
Speaking of 2014, we have been selling from the stockpile throughout, whatever we could. Speaking of the past 3 months in 2015, indeed, the situation in the market turned out to be not so easy, and we allowed our site holders to postpone about 30%, and effectively in February and March that was just 10%. The situation in the market is rather difficult these days, so there is somewhat of a that sense. I mentioned it that the exports to India went down by 30% in Q1.
Morning, or afternoon, sorry, it's Menno at Morgan Stanley. 2 questions. The first is on synthetic diamonds. You didn't really touch on it on your presentation. Could you tell us if you see this as a threat or not, and if not, why not? And secondly, on pricing, the company is quite confident that pricing will recover in the second half. Despite that, the market is tough today. Could you give us any more detail on why you're so confident prices will recover?
Let me start with the artificial diamonds. I was talking about ALROSA and my presentation, and we are unrelated whatsoever to artificial diamonds, and artificial diamonds are unrelated to ALROSA. But let me respond. Well, obviously we do see some threat, but not as a replacement to natural diamonds. You can't expect that. There is a different thing. The thing is that the quality of those artificial diamonds is getting quite high, and the cost of production now is rather comparable to natural diamonds. That's why both De Beers and the Antwerp Diamond Center are thinking how to safeguard the current situation. Hence, both De Beers and a few other colleagues are now developing and have developed machines that would enable cutters and polishers to understand what kind of diamonds they are procuring. Also, our relations with Chow Tai Fook and Signet is also related to promoting the brand of natural diamonds. Again, all diamonds in excess of 1 carat have to undergo a mandatory certification process. You can't get an artificial diamond in the retail center, in retail, because they have to be certified throughout. Speaking of the second half of this year and the pricing environment, we are optimistic. due to one reason: the continued growth in demand for diamond jewelry across the globe, and the surplus currently observed is a temporary thing. It will have been consumed, and the reduction of 30% for cutting and polishing Q1 is an immense number for the market. Whatever India has used up from the stockpile will have to be replenished, and the demand side will recover, and the prices will get back to their historical growth. Our forecast is very conservative, is just 3% for 2015.
Yes, hi, this is Neri, also from Morgan Stanley. One question on your CapEx guidance. It doesn't seem to have been affected by the ruble depreciation. It seems to be quite in line with the previous guidance. If you could talk a little bit about that. And then in terms of government pressures, there's obviously been a lot of news flow year to date and last year as well. Is there any specific activity that the government is putting pressure on ALROSA to undertake, be it cutting and polishing or gold and platinum mining? Thank you.
Speaking of the ruble devaluation we had last year, indeed, it will affect both the cost side and the capex plan, but we already know it would not be as significant because the FX exposed share of all our costs is just 7 to 10% of the expenses we run. Furthermore, with this strong devaluation of the ruble, we undertook import replacement and substitution measures as we try to resort to cheaper domestic products, machines and materials that we can buy locally or in neighboring countries. In any case, we do not expect a major hike in the capex plan related to the devaluation. Considering a cutting and polishing business development, or whatever you refer to, I think our response to that is very precise. In the strategy, I had a slide on the screen demonstrating the fact that ALROSA will focus on diamond mining only, without any focus on side businesses. In terms of the government wishes, well, they want us to be more active in developing our the government would like to see those businesses developed generally on the market, but not through ALROSA. They would like those competences to be fostered, but nothing more than that. Well, speaking of gold and platinum, no plans related there too. We do have gold and platinum in some of our fields in the ore that we mine already. So we will do some buy-side gold mining, but this will not be about a standalone business. It's just using up what we can use already.
Чекунаева Юлия, Goldman Sachs.
Yulia Chepunova, Goldman Sachs, and I'll ask my question in Russian. I have two questions, frankly. One is related to your cost inflation in 2015. There is a strong pressure on the ruble, and the recent macro update from Russia demonstrates some very significant inflation numbers. I'm wondering if your budget factor in Russian domestic cost inflation, and how often do you increase your payroll and wages in Yakutia? And another question. In 2015, you expect significant repayment, and also you expect your capex to go down in the following years. What would the company do with its free cash flow in the coming years? Maybe you would consider any mergers or acquisitions, or would you focus on paying the dividends, maybe? Thank you. Let me repeat as to the devaluation. Obviously, there will be an effect on the investment plan and our operating expenses. We initially targeted an increase of 8 to 10%. It's hard to tell whether that would be 12% or 13% now, but no more than that. Given the revenue hike, which has been doubled through the devaluation effect, you understand the performance of the company in 2015. I would even dare say that we expect 100 billion rubles of consolidated profit in 2015. This comes not only through the devaluation, but also through effective operations of the company. The devaluation is still there. We should give credit where it's due. As to the inflation of our costs, we do adjust payroll once a year by the inflation ratio. It's set forth in the collective bargaining agreement, although it's a little bit more complicated, but in a nutshell, it's like that. More questions, please. And how we're going to use the cash flow. Sorry, how we're going to use the cash flow. Well, repayment of the debt is an important objective for us, so we'll keep repaying as we can. Considering M&As, well, we did look into certain assets elsewhere outside Russia. I wouldn't comment in detail. It's just not interested. The prospects are good only in Angola with a couple of very interesting field. One is just superb, but again, it's very technical and it could be like globally prominent, if I may put it this way. It would require some investment, significant investment. So if we manage to agree with the Angolan side, it could be an option for us. Potentially, we can consider buying the grip pipe from Lukoil, but so far it's more of a thinking process than the talking process, because our initial target is to sell the gas assets and have an extra $1 billion from that sale. So that's the plan.
Спасибо за презентацию. Это Георгий.
Thank you for the presentation, Georgi Jits, Deutsche Bank. Let me ask the question in Russian as well. I also have a question about your plans. You have this Timir project you're working on together with Yevraz. Yevraz has mentioned a few times there are plans to reconsider certain metrics for that process, for that project. I'm wondering if you could give us an update for the production targets 3 to 4 years ahead, and also the capex target for this project. My other question relates to Angola. I'm wondering how significant that segment of your business could become. Do you have any other plans related to Katoko mining and potentially increasing your stake there? If you're saying you're interested in those fields in the region, how significant could that investment become? Can you give some numbers of your exploration capex in 2015 and 16? Thank you. Speaking of Katoka, we don't have plans to increase the shareholding in Katoka given the very complex shareholder structure, so we're not considering. But there are some prospective fields. It's too early, though, to discuss any numbers. We need to understand the scale at first. Speaking of capex for 2015 or 2016 is too early because we have not come to any agreement with the Angolan side as to the structure of our relationship in the future. So that's a question for 2016 or 2017. No numbers as yet. It's all too early. It's just a very technical geological discussion, if I may put it this way. Now, Yevraz. Yevraz is trying to attract funding from VEB, Vneshekonombank, for Timir, and in 2016 they are going to launch phase 1, Tayozhny field, and the capacity is 3 million tons, about so.
Hi, Des Killelea, RBC. 2 questions. The first is, looking at your production growth in carats, can you give us that same in dollars, dollar millions or dollar billions? And also, could you comment on the meeting of the producers in London a few weeks ago where they reputedly discussed synthetics and whether you think that could result in generic marketing for the industry?
Speaking of the production growth, again, we want to ramp up from 36 million carats in 2014 to 41 million carats looking forward. I can't give you the number in dollars out of the top of my head. It would be somewhat similar, so that will not be significant growth because it's just 2% per year in carat terms. Currently, we have $5 billion in sales at 2% increase per annum, and that's the kind of growth we would expect if we assume flat pricing. But we also envisage 3 to 4% growth in prices every year. So I think you can do the maths to understand our revenues in the coming years. Speaking of our joint efforts with De Beers and Rio Tinto, indeed we have agreed to establish an association of diamond producers this year. We are concerned first and foremost with the marketing situation following the loss of monopoly by De Beers. Well, we must admit, De Beers had been investing a lot of money into all sorts of advertising and marketing campaigns. But we have agreed we now need some sort of an industry association to consolidate our efforts and stream some money towards marketing of diamonds as an eternal value.
Patch, RBC. A question on your debt maturity profile. You recently restructured some of your dollar debt and pushed it out. Are you comfortable with your profile as it stands, or would you look to push debt repayments out any further?
Well, the current repayment schedule is comfortable for us, absolutely. We have the liquidity to repay 2 tranches of ruble bonds in summer and in autumn this year. Indeed, we extended a few loans because we must agree longer-term money is more comfortable than some particularly large repayments. We are in a comfortable situation now, but the loan agreements we have do enable us to provide for early repayment, and we'll do some this year.
Neri from Morgan Stanley again. Looking at your production profile, you will have the composition of your production coming from different mines compared to 2014. So, for example, Udachny will play a bigger part, Aihal will play a smaller part, Severalmaz will play a bigger part. My question is, do you expect this mix change to affect, one, the quality of your diamonds, then therefore your revenue per carat? In other words, are the diamonds coming from these new mines better quality or worse quality? And on the other side, are these mines more or less cost efficient? And therefore, will we see an increase or decrease in the cost, in the overall company cost per carat?
Well, the cost per carat and the value per carat. In terms of value per carat, I think the situation is rather stable, and I don't think it depends on the fields. It's the mix between gem quality and industrial diamonds, which is very sustainable. 30% industrial, 70% gem quality. Considering, well, any changes, well, we don't expect the value would change. It would be pretty much the same. Really, it's very tough mix. Well, look, we have Severalmaz, which will come cheaper cost-wise, but at the same time will see a significant increase of Mir underground production. It will be twofold growth, but the value of stones is just immense there. It's incomparable. In order to understand the average, you need to do a very thorough analysis. And for the decade, for example, looking forward, our averages still remain flat.
Matthias Westman from Prosperity. I have a couple of questions. We heard something recently, and maybe I misunderstood it, about you were planning to sell somewhat higher quality gems this year than previously. Could you elaborate on that? And also, I'm wondering a little bit about the inventory strategy. I think you sold some of your gems out of inventory last year. Are you planning to continue to work down inventory, or is this kind of something that will be fluctuating? Yeah, it was about the kind of average quality of gems sold. That we heard somewhere that you were planning to sell kind of higher quality stones this year. Is this correct?
This page demonstrates our mix as we sell it. For many years now, the company has enjoyed a very sustainable mix. Depends on our production. And we don't focus on selling this or that particular grade. We sell everything across the board, whatever we produce. Sometimes there is a particularly higher demand for larger gems or smaller gems, but normally this is very temporary within a year, and it's just impossible for us to pick one grade and sell only that. And as to your other question about destocking, in this presentation I mentioned that we are focused on destocking. In the course of 2014, we managed to reduce our stock by 3 million carats, and the plan for 2015 is to sell another 2 million carats from the stockpile. As we get 12 million carats in total of the stockpile, that would be rather low in terms of what we need anyway for our sorting, appraising, valuing the stones, etc. So in 2016, we'll probably be there with the optimal level of the stockpile.
Could you talk a little bit about the management incentive schemes, and how would you, if you could devise the new CEO's incentive package, how would you devise it, and what goals would you look to, for him to manage toward?
В компании только что принята новая система.
Well, the company just recently adopted a new incentivization plan. That was done end of last year, and I don't think I can add anything on top to what has been approved already. The situation there is very straightforward. Increase the volumes, reduce the cost, reduce the debt, improve the EBITDA, maximize your profit, repay the dividends, add shareholder value. That's it. It's just 7 or 8 key metrics that everyone understands easily. I don't think we can add anything on top. We just must deliver. That's all I can say in response to your question. If you want some particular numbers, please revert to that program. It's very easily understood, and we can dwell upon that if you wish. Maybe you can propose some kind of a plan.
Sorry, Bo Hunt with Fidelity. Could you talk a little bit about your discussions with the rating agencies? Obviously, given your debt reduction target for this year, which is a pretty substantial portion of your existing debt load, what are the discussions like with their agencies? When are you meeting with them next? What are they looking for in terms of an upgrade from you? Or is that, as your rating at this point, really shifted to being driven by the overall sovereign credit rating?
Thank you for your question. Indeed, we are in permanent contact with rating agencies, and currently we don't have any issues outstanding related to the company. But the major issue is, of course, situation in Russia and situation with the rating of Russia. So this is the pressure on our rating. So now we are in permanent negotiations with them. We have met several times with major ones this year and continue to do it, and hope there will be some results. But of course, we can't give any specific guidance considering current geopolitical situation.
Des Killedy, RBC again. 2 questions. The first is, I assume that the inventory picture on the screen includes the deferred goods in the first quarter. And the second question is, what is the view on the timing of further release of shares into the public market? When you first listed, I think there had been a program that would have seen more shares made available to the public by now.
Да, безусловно, в цифре
That's correct. The number of 15 million on the page is it does include deferred demand, which is there as of January and February this year. You're right. But frankly, we didn't increase our stockpile across these 2 months. We had the total stockpile of 14.7 or 0.8 million carats end of 2014 in the course of the first 2 months. They have not increased. We did want to sell more, frankly, and it could stand at 14.5, I think, or 14.3 million if the situation were quite different. Now, speaking of the free float, following the IPO, the Republic of Sakha-Yakutia and the Russian Federation signed a shareholding agreement according to which they're not going to do that in the coming 2 years, and they will revert in 2 or 3 years.
Mineral extraction tax, we saw a 35% increase in March of last year, and clearly now the Yakutian government is getting a lot more rubles for the mineral extraction tax, so they might be happy. But are there ongoing negotiations to potentially increase mineral extraction tax going forward? How do these negotiations usually take place? And how should we think about mineral extraction tax going forward?
решение о
Decision on the MET increase is made by the Ministry of Finance of the Russian Federation, the federal government. And normally this is proposed by the company and the Ministry of Finance together. Since we are the only one, pretty much the only one diamond producer in Russia, the position of the Republic of Sakha is more of an advisory nature. There are no talks to increase the tax even further, and there will be none, I hope, because the Republic is very happy with the most recent hike, given that the MET is applied to the dollar sales converted to rubles, so without increasing the MET rate or the price list, they will still have a high revenue. Georgi from Deutsche. 2 more questions, if I may. One is related to the exports duty. You have Russia has certain commitments following its accession to the WTO that extend in 2016 and further up. It's about discontinuing the customs duty 2016 and onwards. Any change of plans here? And my other question, you plan to sell 2 million carats from the stockpile in 2015. What if the situation does not allow for this sale? Maybe you're discussing with Gokhran to sell those 2 million to them. Is that an alternative? Answer. You're right. With the customs starting in 2016, there will be no customs duty. There is no document that would envisage any extension of the deadline here, so it will go to plan. As to 2 million carats and potential difficulties in selling them, we haven't discussed that with Gokhran, and we have not sold anything to Gokhran in the past 2 years. We believe we will be able to do that on the market. But even if we do sell to Gokhran, well, they are not significant sales. The most recent sales were just $100 million. It's not something that can affect our operations, and they just can't buy more than that. They wouldn't.
Good afternoon, Jamie Strauss. Thank you for the presentation. You gave us some detail about the Angolan interest. It sounds like a development project to me. Could you perhaps expand on your thoughts on exploration around the world outside of Russia? And I note some of the interest that you've been doing in Botswana recently. Thank you.
Our efforts in Botswana, Zimbabwe, and a few other African countries are focused and limited to exploration efforts only. We do have a JV in Botswana, that's true. But again, it's a very early phase. We don't run any significant cost there. It's about looking into some potential prospects that could become available in those regions. That's the kind of level we are involved now.
Rich from Barclays. I'm sorry if I missed this, but in terms of the net debt targets that you've set yourself and perhaps free cash flow as well, what's your ruble assumption that you're using for 2015? And secondly, you only have 10% of debt now held in rubles. You know, it sounds like you plan to pay that down this year, but is this your optimal capital structure to be 100% FX denominated, or if the rates were to become attractive in Russia, would you perhaps refinance the ruble there and maybe pay down external hard currency debt? That would be great. Thanks.
Что касается...
Speaking of the ruble bond repayment, indeed, following the repayment of the ruble bonds, we will not have any liabilities in rubles. Speaking of what we do with the foreign currency, we just build up a liquidity cushion in a foreign currency. We don't convert that into rubles and then back into foreign currency. We keep piling up the foreign currency cash to repay.
Да, по курсу. По курсу...
Well, as to the budget the budget was made at 45 rubles per dollar. Well, apparently the rate will be different in 2015, and we'll be thinking of 56 through 58 rubles per dollar. The numbers I have produced in this presentation are very realistic at those rates.
Здравствуйте, Ксения Мишанкина.
Good day, Ksenia Mishankina, UBS. Could you advise on your leverage target in the long term? Thank you. Our internal target is the leverage of around one times EBITDA. No more than that.
Question on the export duties. If I remember correctly, you currently pay 6.5% export duties. And does that mean that as of 2016, like for like, your realized prices could be 6.5% higher?
No, the price will not go up by 6.5%. The thing is, we take money from the customer, and out of that we have to pay 6.5% to the government. So in that sense, we'll just keep the 6.5%, and that's it. We'll not be paying the export duty. I have another question as to the FX target you have in your budget. When you mentioned 100 billion rubles of net income potential in 2015, what rate is this target based on? Answer: that's based on the 56, 58 rubles per dollar, the current rate. And that's a very cautious forecast, I'd say.
Prosperity again. You said that you had a target of leverage of 1 times EBITDA. In this case, judging from other calculations, there will be quite a lot of excess capital. Could you elaborate more on the dividend projections or policies going forward? Because that would allow you to pay out a substantially larger part of profit than you currently do.
Well, maybe we could change that, or maybe we can't. It's very much of a philosophical thing. Let's wait for the results to come, and let's discuss it then. If we assume that the company does produce 100 billion rubles of net income, and if we assume 35 to 40 billion ruble dividend, it would be quite good already. What happens next in the following years, we'll see. Our dividend policy says we must pay no less than 35%, but we can pay more already, so we wouldn't have to review the dividend policy. It's just about making the recommendation. If we have the free cash, why not do that?
Stanley. Regarding the Association of Diamond Producers, you obviously mentioned yourselves, De Beers and Rio Tinto. Can you confirm any other participants or any potential budget and ambitions of the association long term?
Да, мог.
Well, other participants can be involved. The smaller size, we have discussed that with pretty much all market players, and there is some interest to participate. Speaking of the budget, so far we don't have any number, since we are not decided as yet on what exactly we will do marketing-wise, what particular areas we'll be developing. Then we'll understand the budget, but the numbers will not be high, like $2 to $3 million to start with. Well, colleagues, I would like to thank you again for your attention. If we don't have any further questions, then thank you at this point for your focus on ALROSA. And I would like to give credit to you. Really, we have been talking to people ever since our IPO, and I would mark some more qualified questions, so to say. You know the company better, and you're more targeted in your questions. Let's keep working together. On our part, I promise to do everything possible to make you happy with our performance. Thank you.